Okay, great. We're live. Let me just check. Let me just share my screen. Is the screen visible? You can put it in chat box.
Yes.
Okay, great. Okay, friends, welcome to the first finance demo session of August of free groups. Today's a topic is checking the financial status or the health status of your bank, because there are many a times rumors flowing all over the media, and we all know what reputation does media carry in today's times. So that is the reason I posted the video. I hope all those who have joined at least should have watched that video. It was that video was released around 8th or 9th or 7th of March, just 2 to 3 days after the Yes Bank fiasco happened. And he has actually, the say reporter in the video or the media person has just tried to, I will say, correlate everything to one thing, the MCAP ratio. So let me just debunk a few myths today about that. So all my presentations always begin with thanking the Lord Almighty. Finance always begins with thanking my dad first, because it is after all a tribute today to him. So it would have been his 77th birthday today if he was there with us. No doubt physically he's not there, but yes, his soul is still there. Again, definitely big thanks is due to Lord Almighty, who's given me much more than what I deserve. So this is my brief biodata. You all are aware of it. So uh, today again have accorded the day as the mini day of education in a digital format, slightly different from the first day of education I took up on 30th June. So this is the Zoom free demo session. The first one for finance, we earlier had for practice management on Saturday. Uh, Today on Wednesday, I'm having it for finance. Morning had it for paid group. Evening having it for the free groups. So this topic is how to check the, say, uh, health or the financial status of the bank. So let me just tell you a few things about it. What exactly does this mean to most of us? Just a minute. Sharing the screen again. I'm sorry. Okay, let's move on. So we all know that many of the times the banks or the financial institutions, they show signs of trouble, or say there are very negative reports about them sometimes, and sometimes the stock markets highlight a bad situation of a bank even if it is not. And we all know what happened to Yes Bank on 5th of March. But the only word which is there amongst the audience or the, say, general people is that the private banks are not safe, the nationalized banks are. To put it in reverse mode, what I want to actually convey is that I have said many times, I'll convey it again since it is the topic of banking today. Uh, all the banks, be it the, say, private bank or the, say, nationalized bank, they're all the legitimate sons of RBI, and there are no, say, nothing we can say unsafe about private banks. Because Yes Bank, if it would have been, say, not in the good books of the government, I'll say, it would not have been revived very soon. We all know 5th of March, moratorium of 28 days was applied till 3rd of April. I remember the date because it was my brother's birthday and we were having a family dinner. Luckily it was a pre-COVID celebration. So we were sitting and suddenly we all have our say primary family banking in Yes Bank. So my brother was say startled just to receive the message that the Yes Bank situation has happened. So yes, we both are say equally interested in financial studies, but he is slightly in a different mode in that regards from my aptitude towards banking or finance. His is in a different kind of his is of figures and numbers of different kinds. So he was startled because then we I remember what dad had said told us many a times that this is not going to be there, in spite of the fact that he has my father had worked in State Bank, which was actually a nationalized, the biggest nationalized bank. And guess what? Who came to the rescue of Yes Bank? The say biggest nationalized bank, SBI, with the share of 49%. And that is the thing which was very surprising to many, that this thing can also happen. And guess what? The Yes Bank was on its feet uh, on 16th of March, having the moratorium lifted within say 11 days itself. So that was the surprising thing for many. And imagine the PMC bank crisis, which happened in last October or November 2019. It is still not been still lifted as yet. So government and RBI revived it very quickly. So it was not actually that the bank's savings will be wiped off. And in any case, the reason of that was the last year which the message spread around September or October, courtesy the Siliguri branch of the HDFC, which had categorically put a stamp on the passbook of the customers saying that deposits only up to 1 lakh are guaranteed. So in the budget 2020 by Ms. Nirmala Sitharaman, Honorable Finance Minister, in January 2020, she actually raised that DICGC, Depositor Interest Credit Guarantee Corporation, insurance from 1 lakh to 5 lakh. Believe me, it was just an eyewash. Even if the insurance is not there, the money is not going to go anywhere, especially in the RBI regulated banks. It is just for the mental security of people like us who feel that the bank's money will not be safe. If banks start closing down, believe me, the economy will crash pretty much bad, at least in India. Uh, I can't say of foreign countries, their system is totally different because again, we still have a black and a white culture in India. In foreign countries, there is nothing called as that because of the social security number concept. So, but Yes Bank fiasco was one say alarm bell for many people to set that there are many reasons, and we have to understand even if a bank fails, the RBI is there, and they actually if you are following newspapers, the normal newspapers, I won't say the financial newspapers, you might have been reading every quarterly, say every quarter or every third month or 4 month, that the RBI has imposed a penalty of such on such and such bank. The banks are supposed to submit all their reports and all their say documentation with the RBI. In actuality, many banks do fudge their numbers, and when the auditing is done, they get caught, and that is where the problem comes in. So you yourself being a customer can track actually what warning signs your bank is actually having, so that you can be say mentally safe, at least regarding the bank you are banking with, whether it is safe or not. Let's see, if you have watched the video told you about the MCAP, market capitalization ratio. I'll be taking that part exactly in the end only. In the last two slides, I'll be taking that up. But before that, what are the actual factors which we need to really look into when we have to say check the health parameters of our bank? So I'm going to give you 8 such metrics, and believe me, MCAP is not part of those 8 ratios, or say, I will say those 8 metrics or 8 ratios of that sense. Okay, so what are those 8? The gross NPAs, the net NPAs. NPAs we all know, net non-performing assets. Then the provisional coverage ratio, or the PCR, the capital adequacy ratio, or the CAR, the CASA ratio, current account saving account ratio, the CDR, the credit deposit ratio, and the NIM, the net interest margin, and of course ROA, return on assets. These are the 8 points separately. I'll be giving you in brief description about these 8 parameters. And these all ratios, numbers, assets are actually mentioned in the bank's annual report, plus the quarterly reports they submit to the RBI. So there is nothing to worry about that part, that these things will not be there. So, so the gross NPA or the gross non-performing assets, they actually indicate that how much are the bank's loans are in danger of not being repaid, whether they have been issued without any mortgage, without any credit guarantees, or without any say assets being held in against that. If interest is not received for 3 months, the loan becomes a NPA in bank's books. So high gross NPA means the bank's assets are in a bad shape. What are the bank's assets? Loans are the biggest assets of bank, because it is bank's money which is being given to the consumers or the customers. And actually, if those assets are not taken care of by the consumers, yeah, or the interest is not returned back, how will the bank continue to function? Because practically speaking, loans are the biggest way for the bank to earn anything. So let me give you some numbers as well. What are the worst or the best? So the say percentage wise, the best five banks maybe. Again, this is only for the gross NPAs: HDFC, Bandhan, DCB, IndusInd, and Kotak Mahindra. So, and the worst: IDBI, Lakshmi Bilas, Central Bank of India, UCO Bank, and Allahabad Bank. So these banks are the ones. No wonder IDBI, courtesy Vijay Mallya, is in the top list of gross NPAs. So plus the LBB also. LBB had say the biggest lender in the form of DHL as well. So these are the various say banks which can be categorized into the category of offenders. Then we come to the net NPAs. So banks do have some margin of some loans going bad. There may be some aspects of banks which we can say that they are not actually say, or say some percentage which they keep as a leverage against some of the NPAs, some of the loans turning into an NPA. So the net NPA is that portion of bad loans which has been not been provided for in the books, in the bank's books, which they submit to the RBI. So technically speaking, gross may be the whole figure. They may be having some leverage margin for that. So the net NPA is technically a better indicator of the bank's health rather than the gross NPA. Kitne loan वापस नहीं आए हैं, gross and net. So that is the difference. So again, check the list: HDFC Bank, Bandhan Bank, Kotak, DCB, and IndusInd. Same banks. The only thing is the ratio and the number slightly varies. Uh, if we talk about say net NPAs of different banks, like if in the worst five, IDBI suddenly disappears because many of their loans have been written off already, and these are the figures of 2019. So IDBI, many loans were written off. Written off means that you can't carry forward your losses forever. At some point or the other, you have to actually write off those loans. Write off का मतलब ये नहीं होता कि उनको माफ कर दिया गया. The only thing is that they cease to exist in balance sheet. Otherwise, the bank's balance sheet will continue to be red for so many years. At one point of the time, or 1 or 2 years, whatever the time has been allotted by the bank as per the security service margin, you have to actually write those loans off. The general public thinks the write off का मतलब बैंकों ने माफ कर दिया लोन. It's not. Just written off the books or the accounts so that a new beginning can be made. So just say revise the NPA. The NPA is basically the loans the bank has not received the interest or the principal for 3 months. That is why the RBI applied moratorium in March. Moratorium means a kind of physical running or physical say, stream which is there, it ceases to exist. That is the only thing which actually says. That is why they said if you opt for the moratorium, your CIBIL or the credit report will not be affected. So this was there because if the bank RBI is giving for 3 months moratorium, and if people opt for it, many people had opted for it, no doubt. But if people opt for it, then the bank's say figures balance sheet will reflect it as a negative thing, and the same would turn into an NPA. So that is the reason the RBI used the term moratorium. So the gross NPA is calculated gross NPA divided by total advances, and the net NPA is by net NPA divided by total advances. So ideal PCR should be 70%. So PCR is basically the provisional coverage ratio. It is the portion of their profit against as a provision for bad loans. Again, a different kind of margin that banks are expecting that, let's suppose 10% of our loans are going bad. So they have kept aside, obviously, there is no control over the profit of a bank by the RBI. So the only thing is they have to declare the figures and officially submit it. But the RBI doesn't have a share in the profit of a bank, of course. So they have set aside, let's suppose, the 10% of their profit, whatever it is, against the bad loans. Because the more number of bad loans are there and they are not offset or say equalized or neutralized, the bank's balance sheet will become negative. The figures the banks has to submit to RBI for the gross or the net NPAs. That is how actually RBI keeps on monitoring. We believe that banks are literally scot free. Believe me, they are not. Even a bank like HDFC last year paid penalty twice of huge amounts because of not complying to the RBI norms. So even the Axis Bank paid it twice last year, and its penalty and was the biggest amongst all the banks which paid RBI the penalty. So an ideal PCR is above 70%, which means asset quality issues have been taken care of the bank if it is not vulnerable. So let's see the PCR wise bank. IDBI Bank 92.4. IDBI Bank sets aside almost all of its profit. कि मेरे सारे लोन पिटेंगे तो मैं सारा प्रॉफिट अपना उसके अगेंस्ट कर दूं. So धनलक्ष्मी बैंक, IOB, ICICI Corporation Bank. If you see in this list, there will be very few private players. Only ICICI Bank is there. The rest all are the government banks, because the government banks usually have a system different for loans than the private bank. And if you see the worst five, South Indian Bank, IDFC First, IndusInd, RBL, Karnataka. So provisional coverage ratio is basically the percentage of asset quality classes that have been resolved. So provisions made divided by the gross NPA. Again, that percentage figure comes into play. Provisions, if they are 10%, the NPA is over that. So they have made a margin from their profit only, that we don't need to show our losses. We have all, हम कम खा लेंगे, कम प्रॉफिट ले लेंगे, लेकिन हम अपना लोन नहीं दिखाएंगे. That is the way the banks fudge the figures, and that is where the problems happen sometimes. Now the CAR, the capital adequacy ratio. So banks total say weighted assets against current liabilities. Again, the measure of the bank's ability to meet its obligations. So let's suppose the bank has say liabilities more than its total capital. That is where the CAR comes into fact. High CAR means the bank can absorb losses without diluting capital. Let's check out the figures. The best five are Bandhan Bank, CSB, HDFC, Kotak Mahindra, Axis, Lakshmi Vilas, IOB, Allahabad, UCO, and J&K are the worst ones in terms of CAR. So if you have been say checking figures, this is the fourth point. So if you have checked the figure, apart from the say PCR, all the figures you found, the private banks are in the best five, in spite of the fact that their loans on the higher side, their rate of interest is on the higher side, and most of these private banks also offer the similar say rate of interest as the nationalized bank in terms of return, especially HDFC. Okay, it is also 3.25, 3.5% bank. But the volume of business it has is phenomenal all over India. Then the CASA ratio. This is a very say underestimated ratio. The proportion of current account and savings account deposits in the total deposits of the bank. A lower CASA means the bank is relying on loans only, which can hurt its margin. What do I mean by that? That only way of generating income is through loans. The funding is through that only. The funding is not being there through other assets. The customers have been keeping their accounts. That is why बैंक वाले आपके पीछे पड़ जाते हैं. एक अकाउंट खुलवा लो प्लीज, सारी फैमिली के खुलवा लो, एक एक सबका खुलवा लो. They are like this, not because of for their commission part, but this is for the CASA ratio as well. Just look at the best five again. Kotak Mahindra, United Bank, Bank of Maharashtra, IDBI, Allahabad Bank. Then the worst five, DCB, City Union, IDFC First, South Indian, Lakshmi Vilas. Again, these factors do not matter individually. All the figures have to be on the negative side, at least 4 to 5 out of 8. Then only it makes a difference. So the CASA ratio is the ratio of deposits in current and savings bank to the total deposits of the bank. A higher CASA means a lower cost of funds, which means that a portion of deposits has come from current and saving as well. People trust the bank and keep their money in there. So the CDR, the credit deposit ratio, how much a bank lends out of its deposits or how much of its core funds are used for lending. There is a ratio prescribed by the RBI, so which suggests that if it is an overstretched balance sheet, then that means there is a capital adequacy ratio with the bank. So these things also have to be kept into account. What is the CDR? Again, you will see UCO Bank, Corporation Bank are the best five, IDBI, but the worst five, IDFC, Bandhan, IndusInd, RBL, Axis. So the next important point, very important point, is the NIM or the net interest margin. This is the difference between what the bank say earns on a loan and what the bank pays you on the deposits. This is a very varying factor. There are banks which offer you 7% like IDFC First. RBL offers 6.75. So Kotak has now come down. Yes has also come down from 6 to 5.5. So then there are banks which are offering like SBI which have linked it to say the CRR, and approximately the SBI is giving you 2.75, not even 3.5 or 3.25. It is giving you say 2.75. Even Federal has linked it with that. So correspondingly, the one who is giving on 7 should be charging a higher rate of interest, but their rate of interest what they lend is actually decided by the RBI. So this is the thing. NIM is high for banks with high lower cost deposits or high lending rates. Now see, the best five are Kotak, RBL, HDFC, Indus, and Citi. If they are earning also, they are giving at a higher interest also. And these are the figures of 2019. At that point, Kotak was giving 6, RBL 6.75, even HDFC was at 4. No, I guess HDFC was at 3.5 only. Indus above 10 lakh was at 6. City Union, I don't know, must be around 3.5 only. The worst five, J&K, UCO, Punjab and Sindh in overseas. If you say check or cross check the interest rates of say lending rates loan wise, if I say most of the nationalized bank will have a difference of 0.05 or 0.1% only. They don't differ by much. So if the bank has a low NIM and a high NPA, that is a really bad combination. That means the bank low NIM you understand, I hope. Let me go back. The interest earned, net interest margin, what it is earning and what it is say paying back on deposit, that is the difference between that. Let's suppose the bank is lending at 8% and the interest it pays on deposits is 6%, so its NIM is 2%. That is the way. But if the NIM is on the lower side, the difference is less. If it is giving at 7 and giving you back at 6, then the NIM is 1 and correspondingly it has a high NPA. Understand? Because that is the way it is to earn. अब वो 7 सबसे आएगा तो 6 सबको मिलेगा ना. वो 7 सबसे आ ही नहीं रहा है. आई लेट्स सपोज आधे लोगों से रहा है, तो दैट मींस आ कम रहा है, आगे देना पड़ेगा, तो लायबिलिटी बढ़ गई बैंक की. So that is the reason. In the next say in the last 3-4 months after the lockdown was inserted or the moratorium took say was set up into place, most banks have a negative or a low NIM because either the interests were not coming or the moratorium was opted, but they are still giving you the interest. We are getting interest on our deposits. That has not, yes, that has been reduced by a few banks. Kotak has drastically cut down from 6 to 4.5. So even small financial banks have cut by 0.25 or 0.4. Even the AU small financial was giving at 6.5, 6.4, sorry. Now it is giving at 6. So these past 3, 4, 5 months, the banks have a low NIM. But then these will be the conditions that the RBI will have to overlook when they submit their balance sheets, because the moratorium period would be absolved of all these things. So because the banks have a major income from loans only, which they give to the customers. And So net interest margin depicts the interest income generated and the total amount of interest paid out to the lenders. So this is a higher net interest margin is desirable. बैंक दे 8 पे और वापस 3 पे ले तो बीच में 5 होएगा तो अच्छा रहेगा ना. हायर निम इज डिजायरेबल. सो सरप्राइजिंगली लो निम में कोटक यस आईडीएफसी आरबीएल का नाम नहीं है. इफ आई गो बैक एंड शो यू द स्लाइड of the low NIM or the best five, there it is not there in the worst ones, whereas it should have been there. They are not exactly very high lending banks. They're posting profits. Kotak say is one of the bank with the most healthy figures in almost every say ratios. So even the MCAP ratio, it has one of the healthiest figures. So, but yes, it has the limited say lender base. So these all are interest paying banks. So the non-interest income is another bank and creditor income. So which is measured by the percentage of total funds. Non-interest income divided by total funds is the non-interest income. The eighth or the last factor is the return on assets, also known as the ROA. So it shows how profitable a bank's assets are in generating the revenue. So lower ROA means the bank is not able to utilize its assets efficiently. It means the loans are not getting a payback. Negative ROA means the bank's assets are yielding negative return. So the best five: IndusInd, ICI, City Union, DCB, Bandhan. The worst: Indian Overseas, IDBI, Lakshmi Vilas, IDFC First. So this is the way. So if you watch the video, you must have seen that MCAP ratio was a market capitalization ratio, which is again a media hype thing. What did it say? What did the video say? The video said that the deposit of total deposit of banks divided by the market value of the stock in the stock market. So they say if it is say up to 2.5, it is very healthy. Ratio of 2.5 to 4 is very comfortable, reasonably comfortable. But anything above 4 is dicey or risky. And they gave out say numbers as well to frighten the people. Kotak has 0.83, one of the healthiest, one of the best in the business. South Indian has as low as 34.74. So these were the figures given by the MCAP ratio, which actually, when the RBI sets up a factor to check the bank, how do these media houses generate these figures and reports or set these as the only criteria? It is totally beyond me. So these are the things which you have to take into account. So now you can check out all the figures of your bank. I might not be able to tell you for every bank. I am a dentist first. I am not an RBI person. So these are all the data has to be made public as per the mandatory requirement of RBI. And all the ratios are available on bank's website as well. And sometimes on third-party websites like Policy Bazaar or Paisa Bazaar also. So understand that MCAP is not the only factor or the healthy parameter to look out for. There are all other factors which I just say put across to you. So thank you so much for your patience. So the next session of the paid group would be on MLE as I have notified, but the date has not been fixed. It will be in the last week of August, again in the evening at 8 p.m. I'll notify a couple of days before. And similar session would be in paid group as well the very next day or an alternate day, the same time evening at 8 p.m. on MLE only. The topic not yet decided. So you can say watch all the videos which I have uploaded till now on my YouTube channel. So it is there by my name only, or you can go to YouTube and search my name and subscribe and hit the bell icon. So do send me your feedback in the group. So all the words you can put in, bad or good, both of them would be equally welcome. So thank you so much, and I hope stop the screen sharing for questions from any of you. You can post it in the chat box or you can speak and ask me by unmuting yourself. Any queries? Anything you want to ask? I know this was a topic which was actually not what I always mean to tell colleagues in understanding finance. There are four things basically for you all to understand. apart from the basics, apart from the general basics, which everyone should know. My daughter is in eighth. My elder daughter is in eighth standard. In her sixth standard, there was a say side note or a side booklet, which had all the say I will say basic informations about PPF, NPS, and I was surprised. Not many adults know about it, and there were many sections which they are above even I will say the basic knowledge of the finance. They were there. So apart from the basics, you need to understand first about the taxation part of Indian system. The second, very important but not even taken slight interest by many, is the banking part. This today's presentation was part of the banking. I know, say a thing or two about banking much more. My dad used to say, praise me for this thing that since he retired in 2001, he had little knowledge about how the bank's finacle or the infotex or various systems of banking work. I actually, luckily or unluckily, we had banking accounts scattered all over, say, in different banks before I consolidated all of them into, say, three or four banks. So, in a way, while, say, working, while talking with the bank employees, and say gauging out solutions for any problems that we were facing in the account, I actually got to know about the working of so many banks, almost all of the nationalized bank and a few private as well. I got to know how their software worked, or how the say commands could be there. The lighter or the funny side would be that at least three or four times it happened that I went to a bank, while discussing them I just suggested them a solution. The next question they asked me was, which branch do you work in? Sir, I'm a dentist. I said, you're joking. I'm not joking. I'm a dentist. I'm a doctor first. So I'm not a banker. So they were not ready to believe it. And this not didn't happen even once. This happened three or four times. But that is the one thing. Then third system is the investment part. Investment totally devoid of any stock market. Totally without any stock market. Then the fourth was, then the fourth is the stock market. Plus the, if you add the basics, these are total five things you really need to know if you want to be a good finance player. You can easily omit the stock market if you are not ready to take a risk, or if you're not a say high risk taker. There is no nothing bad about it, but you need to know the basics first. You really need to know the taxation, and you really need to know the banking part. Investment still can be a 50-50. A little knowledge can be there for the rest, or say if you have little knowledge, you can still question your financial advisor. You can still keep a professional for that. But these are the three things you can't skip. To develop some amount of financial literacy, you really need to have a knack for these three things. You ought to take it. So any queries on any, apart from say today's presentation, if any say general financial banking queries, or any other say related to your I will say basics parts, even if you want to ask, we still have some time. You can ask. You can unmute yourself and ask, or put it in the chat box as it suits you. Oh, already there in the chat. Is it wise to have multiple accounts in different banks, or one or two banks like SBI or PNB? See, if you have small kids in house, at least keep one account in SBI, because so many challans or so many entrance exams or so many say deposits are accepted through SBI only. So it is good to have a bank in SBI, account in SBI. I used to jokingly say to my dad, "Dad, मैं आपके कारण respect करता हूँ SBI की. It is one of the worst banks." So पता नहीं, बचपन से I hate bank, State Bank of India. Unfortunately, my dad retired from State Bank. So I said, मैंने सिर्फ आपकी इज्जत के मारे उसमें अकाउंट रखा हो, मैं नहीं उनसे करूँगा. The real truth is that many challans or many fees are deposited through SBI only. Even advanced tax firstly was started in SBI only before the private bank started it. So I'm not a big fan of nationalized bank, and I have just say a very reasonable sum in my SBI account, just for the say little transaction purpose, around maybe 20 to 30 to 40. I don't keep beyond that, but my mostly banking is through private banks only. When I'm not getting anything out of it, apart from the emergency money side, which I always advocate to keep in a high earning saving bank account. What is the loss if I keep my other money as well in the other bank which is giving me more deposit rate or interest rate? What is the say the difference to me? So I actually don't go by that fact that the nationalized banks have to be safe. As regards your question, multiple accounts in different banks, you can keep 30 accounts, 50 accounts, 100 accounts, as many as you want. The income tax department has no objection over it. They only need that whatever number of accounts you have, they all should be reported in the ITR along with the IFC code and the account number. दे हैव नो ऑब्जेक्शन दे. ये भी सीए ने फैलाया हुआ है अपने ने कि ये अकाउंट एक दो ही रखने चाहिए, ज़्यादा मत रखो, इनकम टैक्स की नज़र में आ जाते हो. क्यों नज़र में आ जाते हो? if you are sticking to your basics, if you are opting that. But I keep different accounts for different purposes, and I'm keeping them since my dad was alive and since he was filing my ITRs. He asked me ये किस पर्पस के लिए. मैं कहा आपने बताया इसको ऐसे करो, इसको ऐसे करो, पर्सनल अलग रखो, प्राइवेट अलग रखो, अपना प्रोफेशनल अलग रखो, इन्वेस्टमेंट अलग रखो. आई एम कीपिंग ऑल दो सेपरेट. बच्चों का सेपरेट रखो. आई एम नॉट मिक्सिंग एनी ऑफ माय ट्रांजैक्शंस. It is all a say system made in every aspect in my clinic that I don't need to do it in such a manner. So if RBI rules are same for all banks, why minimum balance, other service charges are different? Some ask for few FDs for privilege services. See, let's keep privilege service for a minute aside. RBI rules are same for all banks, but the returns or the interest rates are not decided by the RBI. It is the CRR or the say repo rate which decides all these things. Whatever the banks can say disclose or afford. So if you want to read more about CRR repo rates, I have already uploaded my say mutual fund series. All these topics have been taken in detail. अभी मैं mutual fund पे पहुंचा ही नहीं हूँ in say in almost 10 parts of the series. I'm just sticking to the basics parts only. So kindly just try to go through them. Many of your fundas will be clear after that. So service charges is a bank's prerogative. The RBI does not have any control over it. If the say service charges were also same, then there is no need for multiple banks. Only a few banks or 2 or 3 banks can suffice. They'll all have different thing. If all ice creams offer fat, what is the advantage of a butterscotch and a chocolate and a vanilla? There has to be some differentiation. Flavor is this say spice of life. That is the only thing. As regards privilege services, it is a say facility offered by the bank to its high net worth individuals or high net worth investors, which actually say who keep their faith in the bank, and the bank is say paying back in a way by as you do in your clinic. For your NRI patients, you offer them all kinds of privileges. Don't you do that? So similarly, banks treat you like NRIs for their privilege accounts. You don't need to be actually say go about it. How many of these 8 criteria should a bank fulfill to be called good? Sir, these are all the ratios. Basically, the NPAs, the net NPAs should not be the net NPA, the PCR, and the NIM. These are the 3 major criteria. Of course, if these 3 are on the negative side, then the other factors come into play as well. But these are the 3 major factors out of 8 which are taken into account. Which series to refer for financial basics? My finance series is already there on my website. I have posted the links many times. I'll post them again in the groups. You can say get benefited from there. I'll post about that. Any more questions? Dr. Vinayak, is there any importance of PB ratio? I didn't get your question. What is PB ratio? What do you mean to ask? PB stands for passbook in banking language. Profit booking? No, not that way. Please rephrase your question. And okay, just a minute. My phone is ringing. Just a second. Okay. What about lockers in bank and safety? Can you throw some light? See, lockers in bank are absolutely safe. If the bank is there, they are all say covered under the DICGC as well. But yes, the bank still plays a you will say disclaimer that if there is anything service lost or if anything is there, they will not be covering it. But yes, they are liable to keep those safe. They can't escape from that responsibility. Dr. Parul asks, is it compulsory to withdraw money from saving bank's account in SBI because my saving bank account has stopped receiving money? See, when we say the bank is active or dormant, these are the two criteria. If the bank, if account is active, you use the word, yes, it is in a working condition. The A word is there in green on if you check online. If not, it is in dormant. You don't need to actually keep only depositing in your account. Most banks come with a clause that at least minimum withdrawal of 100 rupees in 6 months is required, which should be by CIT, customer induced transaction. Can be online, can be physical. You can do a NEFT also. Some banks have it for 1 year. Some banks have it for 3 months. The 3 months banks are usually the nationalized banks. But if you keep on depositing for 12 months regularly, the bank will still turn your account dormant. You need to have minimum one withdrawal on an average in 6 months. Has to be CIT, customer induced transaction, can be online, can be physical. Minimum 100 rupees is the criteria for most banks. So that is why you don't have to do anything. Just get your KYC done and withdraw money once. The account will be active once again. You don't have to pay any say penalty for it. Most of the banks don't charge any penalty for changing account type from dormant to active. Just need a transaction and a re KYC usually. So okay. In this pandemic situation, have the banks lifted the minimum amount required to maintain in the account? No, only the SBI say change its minimum balance scheme recently only. Otherwise, they were surcharging since the past 1.5 year. They were charging hefty amount for say not maintaining the minimum balance, and they had kept it for different for metros or urbans or urban or rural say centers. They had kept different charges from ranging from 1,000 to 3,000 to 5,000. Metro, semi-rural, and urban. And this was their criteria. But now, as of now, SBI has lifted all the minimum charges. But most of the nationalized banks still have a 500 rupee minimum balance for a non-checkbook account and 1,000 minimum balance for a checkbook account. Most of the private banks have lifted it from 5,000 to 10,000. Now you require a minimum of 10,000 most of the private banks as a balance. So SBI is zero. Most of the national bank 500 without checkbook, 1,000 with checkbook, and private banks mostly 10,000. Yes, occasional variations may be there, but this is the broad thing which is there. Are these ratios applicable to cooperative banks? सर वो बैंक ही नहीं होते हैं, कोऑपरेटिव को बैंक बोलते ही नहीं है, उनको सोसाइटीज ही बोलते हैं, उनको बैंक बोलते ही नहीं. मैं तो 1573 है इंडिया में, उनको बैंक्स कह ही नहीं सकते हम. वो जो दीज आर ओनली एप्लीकेबल जिन्होंने बैलेंस शीट आरबीआई को सबमिट करनी है. आरबीआई को सबमिट वही करेगा जो आरबीआई की ऑनलाइन क्लास अटेंड करता है. आरबीआई की ऑनलाइन क्लास कौन अटेंड करता है? जो आरबीआई रेगुलेटेड बैंक होता है. So that is the only criteria. Dr. Vrinda, it was as I mentioned 1,000 before, but the banks privately change हो गया 500 to 5,000 to 10,000. Usually जो आप चेकबुक लेते हो तो इसलिए आपको नेशनल बैंक 1,000 ही बताता है. अगर आप फॉर पीपल हु आर नॉट से जन धन अकाउंट्स हैं, उनमें तो जीरो बैलेंस था. जो एक थोड़े से आते हैं और अकाउंट वेरिएंट्स डिफरेंट होते हैं. ग्रामीण बैंक में कईयों में खुलते हैं, तो आई मीन द रूरल ब्रांचेस. So they have a balance of 500 because usually transactions happen through checkbook only. These days deposit slips are valid up to 2,000 only. आगे तो हम लोग डिपॉजिट स्लिप देते तो या विड्रॉल स्लिप से निकलवाते थे बैंक में जाके. प्राइवेट बैंक में विड्रॉल स्लिप का कल्चर आया ही नहीं है. प्राइवेट बैंक चाहे 100 रुपए भी निकलाना, दे नीड ए चेक. Yes, if you have forgotten the check and you are in the privileged customer, they will issue you a loose check sometimes. So that happens, but it is not there. If I am a second holder in a savings account, do I have it to show in the filing income tax? No, you don't need to show it in the income tax because the liability as per the ITE is only for the first holder. Any more queries? Any more queries or we call it a day. Okay, I hope we're done with it today. So thank you so much for the third session. I hope to see you in the last session on the Endo Haveli page. This is not on the Endo Haveli group, so you don't have to join the group. It will be there on the Endo Haveli page itself, which anybody can watch it. So again, we start sharp 8, and I can trust you. It is again on the topic of wealth creation, rich dentist, poor dentist, but I am sure you will find many new slides in there. Much different from what you watched in the 12 noon session today. So, okay, guys, take care. Have a good next 2-3 hours. 3 articles are pending. Out of them, one is not there. So I'll be sharing those 2 or 3 plus my own article as well. The 13th one. If I'm the 13th co-author, I have a 13th article as well. So take care. See you at 8 o'clock. Some of you, if not all of you, some of you. Thank you. Bye-bye.